Why are altcoins more ideal for trading than investing? Chapter 1. Altcoin Liquidity Crisis, a Western investor's nightmare in a sea of 10,000 coins. Imagine walking into a giant financial supermarket in Berlin or New York, where the shelves are filled with 10,000 exotic beers called altcoins, but only 10 are actually drunk. This is the reality of the early 2024 to 2025 crypto market. Coin explosion, liquidity evaporates, and investors are caught in a game of take profit or die. 1. Scattered liquidity, from ocean to puddle. Klaus Muller, a veteran investor from Frankfurt who once made a 500% profit on Ethereum in Binance heyday, 2017 to 2021, complains. In the past, top altcoins like Litecoin or Chainlink had $1 to $2 billion liquidity on Binance. Now, new coins like Pepe Coin, Dog Meme, or AI Chain, AI token, only have $50 to $100 million volume on OKX or Bybit. It's like pouring one bottle of water into 100 glasses, they're almost all empty. Real example. Fetch.ai, AI token, surged 400% to $3.20 in March 2024 on Coinbase, but plummeted to 90 cents in 6 weeks after London hedge funds like Brevan Howard pulled $200 million to switch to RNDR, Render Network. Pepe Coin, Meme Coin, reached a capitalization of $1 billion on Binance in April 2024, but collapsed 90% to $0.012 in June, when liquidity on OKX was dried up by algorithmic profit-taking. 2. Sector Wars. DeFi versus AI versus memes. Smart money versus algo bots. The altcoin market now resembles a gladiatorial arena, where sectors prey on each other's liquidity. DeFi, Aave, Uniswap. It rose 300% to $120, Aave, in Q1 2024, but fell to $30 after smart money switched to AI tokens like SingularityNet, $AJAX, or Ocean Protocol, $Ocean. AI and big data tokens became the new darling of hedge funds like 2 Sigma in New York, which pumped $500 million into Fetch.ai, $FET, and Bittenzer, $TAO, creating a quick bubble. Meme coins, Pepe, Dogwifat, played by retail traders on platforms like Robinhood and BigGet, but its liquidity is lifetime, often drained by arbitrage bots in a matter of hours. Lucia Sanchez, a retail trader in Madrid, describes the defensive strategy. We had to pivot faster than the algorithm, taking a 20% profit on Solana, $SOL, when it dropped from $200 to $150, then jumping straight into Pendle Protocol, $Pendle, before seeing its liquidity siphoned off by Singaporean market makers. 1 hour wrong timing, 30% loss. 3. Why is this dangerous? The case of small swimming pools on Tier 2 exchanges. Many new altcoins don't even make it to Binance or Coinbase. They are stranded on Tier 2 exchanges like OKX, KuCoin, or BigGet with fragmented liquidity. AI Chain, AIC. Only on OKX, 24-hour volume of $80 million, thin for a $500 million capitalization. Zcasino, ZKS, DeFi gaming token on Bybit with $30 million volume. Easy to whale manipulate with $5 to $10 million injection. Major risk. Slippage monster. Selling $100,000 AC coins on OKX can reduce the price by 15% because there are not enough buyers. Structured pump and dump. Hedge funds such as Citadel in London reportedly made a small-scale play in AI tokens, pumped $100 to $200 million in capitalization, then ran away within 72 hours. 4. Survivor strategies. How are U.S. and European traders adapting? 1. Follow the smart money. Monitor institutional movements through platforms like Nansen or Chainalysis. Example, when Fidelity entered $RNDR in May 2024, the price immediately rose 70% in 48 hours. 2. Fight algo bots with limit order sniper. German traders use bots like 3 commas to place limit orders 5 to 10% below the AI coin price, waiting for a flash crash due to algorithm action. 3. Liquidity hunting. Focus on coins with $300 million plus volume on Binance or Coinbase, example, Toncoin $TON or Sway $SUI, which are relatively shock resistant. Hard takeaway. It's not a stock, it's a casino. The 2024 altcoins are not Apple or Microsoft that can be bought and then put to sleep. They are hot potatoes that must be monitored hourly, sold while there is still liquidity. Avoid it if you are not a professional gambler. As Maximilian Krauss, a crypto analyst at Zurich, says, this is a market for algo traders, whales and lunatics, not for your grandmother who held Coca-Cola shares for 30 years. If you're negotiating your way in, be mentally prepared. Buy like a thief, sell like a terrorist. Chapter 2. Bad Actors. Crypto's Ticking Time Bombs. When fancy tokens turn into financial landmines. Creating an altcoin in 2024 is as easy as creating a TikTok account, but the consequences could be life-shattering. Imagine the digital version of the Wolf of Wall Street. Anonymous teams, AI-generated white papers, and the promise of a guaranteed 1,000% return. This is the dark world of rogue altcoins that turns blockchain into a playground for fraudsters in fancy suits. 1. The Case of the Time Bomb. Berlin Bulls Club and the Illusion of 1,000% APY. In June 2024, the German project Berlin Bulls Club hit the market with the promise of 1,000% APY via revolutionary DeFi algorithm. They tapped German TikTok influencers like Clara Becker, 500,000 followers, for promotion, raising $15 million on the renowned launchpad platform, DAOmaker. But 72 hours after the Dollar Bulls token debuted on KuCoin at $10, the team deleted the X, Twitter, account, disappearing to Zug, Switzerland, a tax haven city. Giovanni Rossi, a Milanese investor who lost $50,000, shared. The white paper looks professional, but the team uses pseudonyms like Satoshi Nakamoto Jr., smart contract audit, apparently paid $20,000 to a fake firm in Estonia. The result? Dollar Bulls plummeted to 50 cents in 48 hours. Liquidity in KuCoin dried up, leaving small investors trapped like rats on a sinking ship. 2. Chilling data. 70% of altcoins die in 2 years. According to CoinGecko 2025 research, 70% of altcoins lost 90% of value in 24 months. 95% of DeFi projects, with APY above 500%, failed within 1 year. A real example. Paris Metaverse Coin, Dollar Paris, launched in January 2024 by an anonymous team in Cyprus. This token was pumped from 10 cents to $4.50 via a fake Metaverse Fashion Week campaign. It now costs 2 cents. Miami AI Coin, $MAI, a U.S. project that claimed collaboration with OpenAI, but turned out to be just using a pirated ChatGPT API. The SEC sued the team in May 2024, but $120 million has disappeared. 3. Modus operandi. From fake audits to multi-chain rug pulls. Modern altcoin scammers use sophisticated tactics. Fake audits. Pay firms like Secure Audit, a shell company in the Cayman Islands, $30,000 for a verified smart contract stamp. Paid influencers. TikTok/YouTube celebs in Eastern Europe are paid $50,000 to $100,000 for 24-hour token promotion. Multi-chain escape. Launch tokens on Ethereum, then port to Solana or base chain to avoid regulatory investigations. Dr. Elena Fisher, a forensic finance expert in Zurich, warns, they're like Hollywood movie makers. The white paper is the script, the audit is the visual effects, and the APY is the fake trailer. Once the money is in, they press the delete button. 4. Europe versus US. How are regulators lagging behind? European Union, MiCA, markets in crypto assets, regulation from 2024, but projects under $10 million escape scrutiny. US. SEC focuses on Binance and Coinbase, but ignores small tokens on DEX like Uniswap or pegging. The result? European scammers move to gray jurisdictions like Georgia or Montenegro, while U.S. teams use a fake LLC in Wyoming to launch tokens. 5. Victim stories. From retired grandmother to hedge fund trader. Hannah Muller, 68, Frankfurt, lost $20,000 of retirement savings on a green energy coin project that turned out to be a template website from Fiverr. Alex Carter, trader at Hedge Fund NYC. We were tricked into $2 million in Singapore AI tokens. The team used stock photos from Getty Images. The office was a virtual office on Zoom. 6. How to survive, due diligence, or die? To avoid altcoin time bombs. 1. Team check. If the LinkedIn team is empty or has an anime avatar, run. 2. Real audit. Only trust firms like CertiK or Open Zeppelin. 3. Liquidity check. Tokens with liquidity below $100 million on CEX, Binance, Kraken, equals high risk. 4. Don't be fooled by APY. DeFi protocol with APY greater than 200% equals Ponzi scheme under the guise of algorithm. Brutal takeaway. It's not an investment. It's a psyops war. Holding altcoins long-term in 2024 is like hugging a time bomb in the middle of a storm. As Lucas Weber, a former scammer turned security consultant in Berlin, says, "Our main target is hungry people, not stupid people. We sell a dream, and you pay for it with your financial life. If you're negotiating your way in, remember the golden rule. Altcoins are speculation tools, not assets. Every second you hold, the risk of rug pull increases. 90% of them are junk play accordingly. Today's crypto market is crypto Chernobyl, full of radiation hype. But if you're not careful, your portfolio will become a no-go zone." Chapter 3. Bots and Algos. Machine warfare in the crypto field. Retail traders become collateral victims. Imagine a David versus Goliath battle, but the Goliath is a robot armed with a laser, while David only has a slingshot. This is the reality of the 2024 altcoin market. 80% of trading volume is controlled by algorithms that move in microseconds, leaving manual traders in the dust of injustice. 1. A world without emotion. How algos destroy retail opportunities. Pierre Dubois, an algo trader from Paris who works for a $200 million hedge fund, divulges his tactics. "We have a server in Frankfurt, near Binance data center, to arbitrage SHIB, Shiba Inu, and Dogecoin, between Kraken, Euro, and OKX, USDT. Our custom bot can exploit 0.3% spread with 500 trades/second execution. Retail? They didn't even see the opportunity before they clicked buy. We had already taken 1,000x profit." Real example. When Ripple XRP rose 10% to 55 cents on June 15, 2024 on Coinbase, the jump trading algo, Chicago, sold 80% of the position in 50 milliseconds. Retail traders in New York who reacted in 10 seconds? Too late, the price had already gone back to 52 cents. Multi-chain arbitrage, Wintermute, Netherlands. Bots are siphoning $5 million per day from the price difference of Solana, SOL, between Binance, Tron blockchain, and KuCoin, Solana network. 2. Secret weapons of institutions, types of deadly bots. 1. Market maker bots. Used by market makers such as Citadel Securities in the US for liquidity control. Example. On Binance, this bot created a fake buy-sell wall around the price of Polygon, Matic, to manipulate traders' psychology. 2. Sniper bots. London retail traders use bots like Maestro to buy new tokens on Uniswap 0.1 seconds after listing, then sell 500% higher 5 minutes later. 3. Liquidity drainers. Jane Street, New York. Algos use submarine tactics, inject $10 million into SUI on BitGet to pump the price, then sell silently on Binance when retail FOMO sets in. 3. Classic case. How Algo killed AI coin project in Berlin. In April 2024, German AI token Neurochain, NCH, debuted on Bybit at $2.50. Within 15 minutes. 1. Arbitrage bot, Wintermute, bought 60% of the supply on Bybit. Price was still $2.50. 2. Jump trading. Algo pumps volume on Coinbase with 50,000 fake buy orders, pushing the price to $4. 3. As manual traders in Europe start buying, institutional bots sell all at $3.80 to $3.90. 4. The result. NCH price plummets to $1.20 in 2 hours. 30 million euro retail money evaporated. 4. Why does retail always lose? The cruel math of microseconds. Speed. Algo servers in Frankfurt, near exchange data centers, execute orders in 20 microseconds, while retail connections take 100 to 200 milliseconds. 5000x slower. Cost. Institutions pay $300,000 per year for server colocation near Binance, while retail just uses cafe Wi-Fi. Psychology. Bots don't recognize FOMO or panic selling. When Bitcoin crashes 10%, the algo immediately shorts altcoins on futures, while retail is still calculating losses. Jessica Miller, a retail trader in Texas who lost $15,000 in Pepe coin, complained, "It's like playing chess against a supercomputer. I saw a cup and handle pattern on the chart of Avalanche, AVAX, but suddenly the price fell because the algo switched to Toncoin, TON. They have weather radar. I just have an umbrella." 5. Impossible resistance. Survivor strategies for retail traders. 1. Don't fight bots, copy them. Use copy trading platforms like Wonder Trading to follow algo patterns. Example, auto buy when chain link rises 5% in 1 minute, pump bot signal. 2. Utilize volatility algo. Use the range order in Kraken Pro, set by Uniswap, at $6.50, market maker bot support level, and auto sell at $7. 3. Avoid low liquidity altcoins. Tokens with volume less than $100 million per day on Binance, such as Phantom, FTM, or Hedera, HBAR, are algo toys. Focus on the more stable ETH or BNB. Brutal takeaway. It's not war, it's massacre. The 2024 altcoin market is a Terminator battlefield where humans, retail, are just collateral damage. As Lars Vogel, CEO of an algo trading firm in Hamburg, puts it, "We don't hate retail, we just eat them. It's the natural law of the market. The fast eat the slow." If you're negotiating manual trading, remember, every second without a bot equals 10x chance of loss. Altcoins are not investments, but fuel for the algorithm war machine. Survival? Become a leech, suck up a little profit, and run before the algo crushes you. A final warning. Crypto is a democratized market, but only for those with nuclear weapons, algorithms. Retail traders? You're just a civilian with a kitchen knife. Chapter 4. Bitcoin, an invincible fortress amidst altcoin chaos. While altcoins are falling apart like a digital flea market, Bitcoin stands tall like an Eiffel Tower in the middle of the storm, a symbol of stability that attracts institutions, governments, and private investors tired of crypto drama. 1. European and U.S. institutions. Bitcoin is the new generation digital vault. Switzerland. The Swiss government purchased $200 million BTC through the Zürcher Cantonal Bank, Zurich State Bank, in Q2 2024, making Bitcoin an alternative foreign exchange reserve. Germany. Börse Frankfurt, the fourth largest stock exchange in the world, became the trading center of the BlackRock Bitcoin ETF, $IBIT, which now controls 5% of the global BTC supply, equivalent to 1 million coins worth $65 billion. U.S. Fidelity Investments and Vanguard entered the Bitcoin market through ETFs on Nasdaq, attracting $7 billion in pension funds in the first 6 months of 2025. Dr. Klaus Schmidt, economist at Deutsche Bank, explains, Bitcoin is a response to the failure of altcoins. It is like digital gold that cannot be forked or destroyed by pump-and-dump projects. 2. The retail investor's escape. True stories from Rome to Texas. Sophia Romano, 42, Rome. Former Cardano, $ADA, and Polkit, $DOT. Hodl, lost 60% of her portfolio in 2024. I sold all altcoins at 45 cents, ADA, and $7, DOT, then switched $300,000 to Bitcoin at $65,000. Now I sleep, well, even though BTC is down to $60,000. No more rug pull nightmares. Michael O'Connor, 35, Texas. Altcoin trader who lost $120,000 on AI coin project, now only holds Bitcoin and ETFs on Coinbase. BTC may not go up 10x overnight, but it's also not going to $0 like 95% of altcoins. 3. Irrefutable data. Bitcoin dominance versus altcoin death. Bitcoin dominance, rise from 40% 2023 to 65% 2025, marking the great migration of altcoins to BTC. Altcoin performance. Uniswap, Uni. Down 60% from $19 to $4.50, 2024 to 2025. Solana, SOL. Crashed from $295 to $95, pressured by Ethereum ETF competition. Meme coins, 98% of projects like Dogwafat, WAF, or Bonk, lost 99% of their value in 1 year. Grayscale 2025 report. 78% of European family offices allocate 10 to 20% of assets to Bitcoin, while only 5% still believe in altcoins. 4. Why is Bitcoin winning? 3 key pillars. 1. Clear regulation. The US SEC approved a Bitcoin ETF, while altcoins like ADA or DOT are still considered illegal securities. 2. Monster liquidity. BTC's daily volume on Coinbase, $5 to $7 billion, makes it immune to trading algo manipulation. 3. Global narrative. The inflation crisis in Europe, 6.5% in Eurozone, and the US debt crisis, $35 trillion, make Bitcoin the new safe haven. Real example. When the French bank Credit Lyonnais collapsed in March 2025, Bitcoin price jumped 20% to $72,000 in 48 hours, while altcoins went into freefall. 5. 2025 strategy. 70% Bitcoin, 30% blue-chip altcoins. To survive and win. 1. Bitcoin as portfolio core. Buy via ETF at Börse Stuttgart, Germany, or Interactive Brokers, USA, for regulatory safety. Use DCA, dollar cost averaging, $1,000 per month to avoid fluctuations. 2. The altcoin of choice for speculation only. Ethereum, ETH. Regarding the upcoming ETF, buy it at $3,500 via Coinbase. Toncoin, TON, Telegram-backed, trading on Binance with a short-term target of 20 to 30%. 3. Avoid altcoins under $100 million volume. Tokens like Hedera, HBER, or Algorand, YLGO, are too algo and whale-prone. Lars Nielsen, 15-year trader, Copenhagen. Altcoins are like fireworks: buy when they're unlit, 50 cents. Sell when they explode, $5. But Bitcoin is the land you build your house on. Never trade land for fireworks. Hard takeaway. This is the age of Bitcoin, not the age of altcoins. The 2025 market is the terrain where algorithm speed and institutional patience battle it out. For retail, if you can't beat the bots, switch to Bitcoin. If you negotiate altcoin trades, think of your money as spectacle fees, high-risk entertainment. Bitcoin is not just digital gold, but the last bastion in an increasingly unpredictable financial world. As Cathie Wood, ARK Invest, said at the Paris 2025 conference, Bitcoin is a monetary revolution. Altcoins, they're just noise in a party that will end one day. Last warning. Altcoin equals roller coaster, uncontrollable ups and downs. Bitcoin equals fast train, clear direction, solid tracks. Driver is the world's most powerful institution. Choose wisely. Do you want to ride a broken roller coaster or a train that takes you to the future? Okay, before we end, don't forget our golden rules. 5 important rules of Mr. Suw Crypto. First, don't use hot money. Use extra or idle money. Do not use money for daily needs or money that will be used in the near future. Second, don't over-leverage. Risk what you can afford to lose if you trade derivatives, futures. Always use a stop loss because the crypto market is very volatile. Third, 70 Bitcoin 30 altcoin. Always allocate more in Bitcoin because Bitcoin is the parent of crypto. By allocating more in Bitcoin, your portfolio will be safer when the market does not meet expectations. Fourth, always stay cash. Always stay in cash 10 to 20 to buy when the market discounts or drops significantly. Then you can sell when the price has risen so that you still have cash for the next discount. Fifth, think long-term. Investing is not about 1 or 2 days to get rich. So think long-term and minimize the risks that might make your money disappear. Everything takes time. Remember, Warren Buffett didn't build his fortune overnight. If you find this video useful, help us to continue to make videos like this by clicking subscribe and share with your family and friends. Don't forget to let us know in the comments column if there is anything you have questions about, because your comments mean a lot to build this channel. See you soon, and don't forget, HODL knowledge and mindset first, then HODL assets.